What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a broad stock market bounce across the board. So it does tell us there's still the possibility this was all just a pullback and we're going right back on the bull. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so I know a lot of you are probably wondering if I still think this is a bear trap, and yes, I still do think this was all just going to end up being a bear trap, meaning I think it's more likely that we're going higher to brand new all-time highs or possibly a higher low before we start seeing this full-blown stock market correction. So that's what I still believe, and if you're not sure about my track record, just go look at the type of videos that I was making in early September, and then specifically go look at October 4th, and then go look at the videos I was making on October 12th. I've consistently given very objective information and made very bold claims, all because of what I see in the price action. Not for any other reason other than seeing objective price action that tells me we're more than likely reaching important tops or very critical bottoms. That is the same exact reason I'm calling this a bear trap. Objectively looking at the price action and all of the bearish sentiment, it's more than likely we're going higher and not lower from here. So I do want you to know that if you're getting overly bearish at these levels, you need to be very cautious because it is still very possible we're going right back up to new brand new all-time highs. As hard as that is to believe and as bearish as the price action has seemed, we are definitely looking like we could be going right back on the bull. Alright, so looking at SPY's price action today, you can see that we were up 1.18% and we're closing back above our 50 EMA, and we're also closing back above the 5 EMA. Now closing back above the 5 EMA is actually a very bullish development because you can see this entire time that we were waterfall selling, we were below the 5 EMA and it was actually acting as resistance. So now we're back above the 50 EMA for 2 of the last 3 trading sessions. So there's definitely confirmation with 2 closes back over the 50 EMA that the bulls are starting to reclaim that level as support, which is going to be a very critical support level. The bulls were also able to reclaim the 5 EMA and they did get rejected at resistance right around the 13 EMA. So remember, the bulls take the stairs up and the bulls have a lot of work to do to start scaring away the bears and sending them back into hibernation. So right now the bulls need to reclaim the 50 EMA as support. So we need to see SPY price action staying above 456 and definitely staying above about 453 to 450. The most critical support level on SPY is still going to be 450. So I want you to watch that level as the most critical support. If we lose 450, we still do have the support trend line right around 447, but we're going to be losing a lot more momentum if the bulls lose 450. So 450 is very critical and below that 447. And if we lose that critical support trend line, we're more than likely going through the full-blown correction and closing the rest of these gaps below at 442 and 436. However, as long as we're staying above these 3 critical support levels in the 450s, I think you need to stay bullish, knowing that is your risk level. A lot of you are probably wondering why you would buy this dip if it's possible we go lower, and it's a very simple question to answer. You're setting your risk at 450, you have all of the risk and reward at your side. If we continue to go higher from here, and let's just say we go back up to brand new all-time highs, that is a very profitable trade. If we break down and we start closing below 447, you take a very small loss below your risk level. So anytime you get a risk reward setup like this, you want to set your risk where you very clearly can define it at a very strong support level. So the closer you buy to 450 or 447, the better your risk reward ratio is going to be if that is indeed going to be the bottom. So don't let anybody scare you out of buying the dip. As long as you're managing your risk, that is exactly what you want to do in a macro level bull market. And remember, as long as SPY is above 450 on the weekly chart, we are still in a macro level bull market. We still have the weekly bull trend and the weekly 20 simple moving average is sitting right there at 450. So don't let anybody scare you out of buying this dip if this is where we're going. If we go lower, let's just say we go to 447, are you really going to care that you bought at 450 instead of 447? If we start breaking below 447, you can take a very small loss and you know we're much more likely going down to 442 and 436. That is how you trade price action and that is how you stay objective. When you're in a macro level bull trend, it's perfectly fine to buy low and sell high. Anybody that's been buying low and buying these pullbacks this entire bull market should be absolutely crushing this market. So I'm trying to teach you to stay objective and not just follow the crowd and the panic sellers who are absolutely just panic selling down here at support and getting overly bearish in a bull market. So follow the price action and stay objective, and that's exactly what I want my message to be to you tonight, is that as long as we're above 450 and staying above this 50 EMA way up here at 456, you still want to stay bullish even though there's going to be plenty of noise and plenty of bearish sentiment. Remember, the retail investors are usually wrong, so the more bearish retail gets, the more contrarian you can become, and you could actually start to become more bullish. Don't get reckless, still follow price action. If we start losing these critical support levels I'm talking about, then you can start getting a lot more cautious of a deeper pullback. But even then, you would still want to try to buy the dip at these gap closes and these support levels, because now you're getting the opportunity to buy even lower, and we're more than likely going to continue to trend higher after all of this fear and uncertainty is gone. So the next critical resistance levels to pay attention to on SPY will be closing back above 462 and our 20 simple moving average, which is right around 464. Remember that the bulls take the stairs up, so we more than likely will see the bulls going up on lower and lower volume. As long as we don't see any high volume selling, that will be bullish price action. So don't just necessarily assume if we're going up on low volume that you can't trust that move. That is a very rookie mistake, and you could see the same exact phenomenon happen back here in October, where we started to go up on very small volume, and a lot of people said you could not trust that bull run because there was no volume behind it, and we just continued to go higher anyway. So don't buy into these narratives that are just subjective. If you're being objective, you can clearly see that bull markets can go higher on low volume, and that is fact. That is not an opinion. You can look at the data and very clearly see you can go higher on low volume. So don't buy any narratives where people can't show you data and prove that they're right. Follow the objective price action, and right now we know it's more than likely the bulls are starting to take back over and taking back over control of SPY, which is definitely going to lead the rest of the stock market higher if we continue to see SPY breaking through resistance. Jumping over to the 1 hour chart on SPY, you can very objectively see that SPY did form another higher high on the 1 hour chart, and the last thing we saw SPY do was form the same exact low that we had before, which was right around 450. This is called a double bottom, and this is your neckline. So you can very clearly see that it looks like SPY is double bottoming off of 450 and breaking the neckline up here right around 458 to 459. Guess what happens in a double bottom when you break the neckline? You repeat this whole entire move from the bottom of the support level to the neckline, which brings you all the way up here to about SPY levels of 467, which is yet again another higher high. So right now, it looks like the bulls are completely flipping the momentum and reversing this downtrend. And you can see that SPY is currently trying to break out of this resistance trend line right around SPY levels of 460. So if we go in tomorrow's trading session and you're starting to see SPY breaking out above 460 and starting to run, don't rule out the possibility that SPY is trying to get to 467 and possibly even higher. Remember, the bulls are going to continue to take those stairs up. So you're looking for price action that looks like higher highs and higher lows. And while we don't know exactly what those higher highs and higher lows are going to look like, we do know they're higher highs and higher lows by just strictly looking at the price action. We can see if we get something similar to what I just drew here, that this is clearly a higher low and a higher high, and that will tell us the bulls are taking over control. It's that simple, and if you overcomplicate it, you're just going to get confused by all of the noise and all of the bearish sentiment. Right now, we can clearly see a double bottom look and a higher high on SPY, so we immediately need to start thinking more bullish thoughts and start following the price action accordingly. Jumping over to the NASDAQ 100 triple Qs, you can see the NASDAQ was up 0.8% today, also closing back above the 50 EMA. So we do see the bulls reclaiming that support level, which is right around 385. Remember, the most critical levels on the triple Qs are going to be this 50 EMA at 385 and the previous all-time high right around 383. And below that, our support trend line is all the way down here right around 368. So we definitely want to say our critical support level is all the way up here right around 380 to 383. We don't want to wait to 368 to know that we're bouncing off support. So we want to get a lot more defensive as soon as we see triple Q start closing back below 383. But right now we see price action over the 50 EMA, and we do have this double bottom look right off of 379. So right now on the triple Qs, we're also getting bullish confirmation price action. Even though we don't know for sure that this ABC correction is over, it does look possible that this is a 3-wave move to the downside, which if you know Elliott wave, corrective moves happen in 3 waves and not 5. So we clearly have a 5-wave move to the upside and a 3-wave move to the downside, which means we could be going right back on the bull and forming another 5 waves higher from here. We'll know for sure if we start getting the bullish price action breakouts, which will be price action back above about 390 and our 20 simple moving average at 394. If the triple Qs get back over 394, this was all just a pullback and we're going right back on the bull, which more than likely means the triple Qs are going all the way into the 420s and we will see that Santa Claus rally. So if you're staying objective and you're following price action, it's very hard to be overly bearish down here while the bulls are holding support. and we know we're in a macro level bull chart. All you need to do is look at the weekly chart and you can clearly see we're in a bull trend holding above critical support. So watch that critical support level at 385, 383, and 379. And if we start getting below 379, then it's still going to be possible we're coming down to about 374, 370, or our support trend line at 368. So immediately get more cautious if we start breaking down below 383. Jumping over to the Dow Jones, you can see we had a very strong bullish bounce in the Dow Jones, going up 1.9%. But failing to close back above the 50 EMA, and we are starting to push on that gap above, which won't close until we get back to 356. So this is definitely a very impulsive looking bounce for the Dow Jones, which was definitely leading the way lower during the stock market pullback. You can see we did gap up today, which is very impulsive, so we do have a gap below that won't fill until we get back down to about 348. So respect the gap below at 348, but don't forget we also have a gap above at 356. And if the bulls can reclaim the 50 EMA at 353, that will be a bullish price action breakthrough. So the bullish price action on the Dow Jones will be closing back above 353 and getting back over that 20 simple moving average at 356, which will also close the gap above. Downside critical support levels are right around 351 and 349, and that full gap close at 348. And anything below that, we're more than likely coming back down to 344 or 341. On the Dow Jones, we really want to see the price action staying above this recent low, which is right around 340. And we definitely need the price action staying above 338 to prevent the Dow Jones from going into a full-blown bear market. So overall, this is a bullish bounce, but we still need to get that confirmation breakout back over the 50 EMA and the 20 simple moving average. On the Russell 2000, we were up over 2% today, and we did close back above the 5 EMA, and we're still holding that very critical support level down here at 213, and we continue to get very strong bounces off of that level. We still need to see the Russell 2000 bulls getting back above about 222 and fully closing the gap above around 228. That should be just enough to get back over that 50 EMA, which is sitting right around 227, and the breakout level will be a close back above 230 and 232. So the bulls in the Russell 2000 have a lot of way to go to get back on the bull, but we're definitely seeing confirmation that support is holding up, which is always going to be the first step to reversing a bear trend. So if we lose that support level at 213, it's more than likely the Russell 2000 is going into a bear market because we're already down over 12% from the highs. So we already did see a full-blown correction in the Russell 2000. Anything below 213 is more than likely going to reach bear market territory. So if you see the Russell 2000 closing below 213, you'll definitely want to sell the next lower high because we're more than likely going through a full-blown bear market. But as long as the Russell 2000 is holding here at this support trend line, you still want to remain optimistic that we could get back up there to close that gap and possibly break out once more. On the Arkk ETF, we were up over 1.5% today, and we are back above that resistance level right around 94. Remember, the Arkk ETF is in a full bear trend, so you don't want to get bullish until we can close back above 107 and get back over all these moving averages, which means we really need to see Arkk getting back over 114 and then all the way back above 119. So the bulls in the Arkk ETF have a ton of work to do to scare away the bears because there's no doubt the bears are in full control. This is a very strong bear trend, and this price action just slices through support level after support level. So the bearish scenario is you're more than likely going to see Arkk getting rejected around 107 and then continuing to form another lower low. And the bullish scenario would be a formation of higher highs and higher lows as we continue to march up and take out some of these resistance levels. That's going to be way out there in the future, and there's a ton of damage repair in this ETF, so don't get bullish until we can get confirmation breakouts above resistance, which is still many days away. On the VIX, we were down over 11% today, so we're definitely starting to see the VIX stabilize around this range, but the bad news is this is still an elevated VIX. Anything above VIX levels of 25 to 26 is still holding this breakout look, and anytime the VIX is in a full bull trend and holding a breakout look like we currently see, you still need to remain extremely cautious. When I say remain cautious, I'm talking about having plenty of cash. You don't want to have no cash in a volatile market because you won't be able to take advantage of volatile swings. If you're not sure how to trade a volatile market, you're better off just going to cash and waiting until the volatility subsides. But if you're being disciplined and you're buying at support and selling at resistance, a volatile market could be a great trading opportunity. So as long as the VIX is staying on this breakout look above 26, stay cautious. And if we see the VIX start getting crushed back down below 26, that will be our first signal that we could be going back into another bull cycle. We'll still need to see the VIX closing all the way back below 20 to confirm that that is the case, but we need to take it day by day and step by step because you're not going to see all this price action happening in just one day. You need to do this work every single day, and you need to stay objective and continue to follow where the price is telling us to go. And right now, the VIX is still telling us to stay cautious. On Bitcoin, we're currently up about 0.25%, and we're seeing Bitcoin trading just below 50,000. Remember that Bitcoin did break down below that critical support level, which I had right around 53,000, so you immediately need to be a lot more cautious. You can see our support trend line is also breaking down, so we're losing the bull trend on the daily chart on Bitcoin, and we're very close to losing the bull trend on the weekly chart if we continue to go lower from here. So the very critical support levels on Bitcoin at this point are going to be right around 44,000 and 39,000. We'll go ahead and draw that support level in at 44,000 so you can see it on the chart, and you can see we are bouncing off of that level when we did try to get that very quick elevator down. Right now, if you see Bitcoin holding above 45,000 to 44,000, you could start looking at the possibility we're going to form another lower high, but we won't know for sure that we're going to new all-time highs because we're losing the bull trend and we're developing a lot of bearish momentum. You can clearly see here if I zoom in that Bitcoin is currently in a full bear trend on the daily chart, and that is just not something that's going to quickly reverse, and we're going right back up to all-time highs. We'll need to see Bitcoin breaking back out through all of these resistance levels and slowly regain the bull trend, which means we'll need to see Bitcoin still breaking back out above that 60,000 resistance, and on the way there we'll still have resistance at 53,000. So don't get impatient on Bitcoin and don't get overly bullish on anything that's in a full bear trend. Right now, you need to see the price action proving it, and we need to see Bitcoin reclaiming that support level at 53,000 and definitely staying above 44,000. On Amazon, we were up just over 1% today, and we still see Amazon closing below the 50 EMA, but we are back above that support level at 3,400. As long as Amazon is below the 50 EMA, I think you need to stay a lot more cautious, and we'll need to see price action breaking back out above 3,460 to get back over that level. So critical resistance will be 3,460, 3,500, and right around 3,520. And as long as we're below 3,560, watch the critical support levels at 3,400, 3,311, and 3,185. Remember, don't get bullish because we don't have the bull trend. Watch those support levels and trade in the range because it's more than likely going to continue to be a choppy market for Amazon. On Tesla stock, we were down just over 0.5% today, closing just on top of the 50 EMA after we did have a very volatile day, and it looked like at one point in the day we were coming down to close that gap, but the bulls did buy the dip. You can see the price action was below the lower Bollinger Band, so we were definitely getting some support from that level, and we did close back over the 50 EMA. You can also see the price action is closing just above that support level at 1,008, with the close today closing right around 1,009. So we're right on the hairy edge of this support level, and if we start breaking below the 50 EMA, which is right at that $1,000 level, we're more than likely going to fill the gap at $910. If we close below that gap and continue to trend lower, you're looking for the next gap close at $843. Remember, we were watching this consolidation wedge bull flag look to see if we were going to break out to the downside or break out to the upside, and it's very clear that we did break out to the downside. So we don't want to get bullish on Tesla stock unless we can get back over the median of this consolidation, which means we need to see Tesla getting back above about 1145. If Tesla can't get back above 1145, there's really no reason to get bullish because it's more than likely we're going to close these gaps down here before we go any higher. If Tesla can get back above 1145, then it's looking more likely like we can close the gap at 1208 and attempt to break out at 1240. But there's a lot of price action on the way for the bulls to get up to those levels, and it looks like right now the bears are taking advantage and trying to get Tesla to close below the 50 EMA. So watch that very critical support at 1,000. On Apple stock, we were up over 2% today, and we continue to see Apple stock looking extremely bullish. We have that very, very strong bull trend, which just won't give up, and the price action continues to close at new highs. So we see Apple closing up here right around 165 and getting rejected at that resistance at 168 and 166. It still looks likely that Apple is trying to get into the 170s, so look for the confirmation breakout above 166 and 168. However, you can clearly see we are meeting plenty of price targets here, so watch the critical support levels at 162 and 157, and if we start closing below 157, we're more than likely going to see that full-blown correction in Apple stock, which could take us all the way back down into the 140s or possibly even 130s. I don't think that's going to happen as long as we have the bull trend, so watch those critical support levels at 162 and 157. On the financial sector, we were up over 1.5% today, closing back over the 5 EMA, but still closing below the 50 EMA. We need to get back over that 50 EMA and try to close that gap and then attempt to break out so that we can go back into another bull cycle. Right now, we still see the financial sector looking weak, so don't get overly bullish. On the industrial sector, we were up over 1.6% today, and we did close back over the 50 EMA, so this is definitely a very bullish development. If we can continue to go higher and close the gap and get back over the 20 simple moving average, we could start to develop another bull trend. On the healthcare sector, we were up 0.57% today and getting rejected at resistance at the 50 EMA. We need to see the healthcare sector getting back over that 50 EMA for hopes of gaining another bull cycle. The energy sector was up 1.49% today and closed back over the 50 EMA, so we could be developing some more bullish price action. So jumping back over the S&P 500, we definitely still have plenty of volatility in this market with the VIX continuing to close above 26, and we still see plenty of volatility in the sectors. However, if we're looking at SPY, we can see that the bulls are taking a stand and holding up these support levels and even closing back above some of those critical resistance levels. So if you're staying objective and you're following price action, you can definitely see SPY is starting to form higher highs and a possible double bottom look on that 1 hour chart. So it is possible that SPY is trying to get back up to another bull cycle. Don't rule out the possibility as long as we're above critical support, and don't let anybody scare you out of your long positions. If we're holding above critical support and we're in a macro level bull market, you want to buy the dip because you always want to buy low and sell high. Anybody trying to scare you out of buying low has absolutely no idea what they're talking about, and they're more than likely not doing very well in this bull market. In order to do well in a bull market, you need to take on risk and you need to clearly define your risk. It's okay if you're wrong because your risk is defined, and if you're using proper risk management, your losses should not outweigh your wins. If your losses are outweighing your wins, you're not using proper risk management, and you need to go learn risk management before you continue to trade. Setting your risk at a critical support level is exactly how you trade a bull market, and that's exactly the opportunity that SPY is presenting itself. So take advantage of this bull market and continue to stay objective. And right now, I still think this is a bear trap, and so far the price action is confirming that what I thought was correct. We still need to take it day by day, and we're not out of the woods yet, so don't get overly complacent either. Every single day, we'll continue to look at this chart and we'll stay objective. And if I see something shifting and I start to see that we're going for more downside, I'll be the first one to let you know. Also, don't forget that I have my own trade alert service called Bank Trade Alerts. That's an algorithm-driven alert service that only trades the ETF TQQQ, and you get all of your buy and sell alerts directly via email and text message. I currently have a Black Friday deal for 67% off your first month, so now is the best time to try Bank Trade Alerts, especially given all of this market volatility. You can find out all of the details how to join Bank Trade Alerts and claim the Black Friday deal by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.